Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 16th of April 2021. Alright everyone, let's get into the news from the last 24 hours. And actually, before we do so, I did want to give a quick shout out here to a stealth project that I am an early investor in, alongside some great people here, Kane, Robert Leshner, Hasu, and IDEO Corolab Ventures, and Calvin from Compound here. If you are a technical person or someone who is interested in becoming a technical co-founder of this project, feel free to reach out to James Simpson here. James is also the co-founder of MStable, another project I'm involved in. I can't tell you exactly what the project is yet, but I can say that it is it's awesome. It's a really great project. I mean, I wouldn't be involved if it wasn't awesome. So definitely reach out to James if you are someone who's looking to be a technical co-founder, looking to be part of a great new project within the space. So, as I discussed on yesterday's Refuel, the OpenEthereum kind of client for Ethereum was having issues syncing after the Berlin upgrade. Now, that's been resolved. I mean, I think it got resolved like half an hour after I kind of put the Refuel out, or maybe even half an hour after I finished recording it. It was pretty quick. The fix was found by core developers Martin and Wei here, and you can see the kind of thread here where they're discussing the fix and what was changed and everything, and kind of what went wrong. So yeah, it's a bit technical, so I'm not going to go into it, but great to see this was resolved in a speedy manner. And as I discussed yesterday, because Ethereum has this culture of we like, if something goes wrong, we're just going to fix it like immediately. We're not just going to be like, oh no, okay, let's forget about it, right? Oh, and like everyone just turns toxic and saying, how dare you kind of like mess up the network or whatever. There's none of that in Ethereum. There is, let's just get it done, and we did, which is really great to see. So yeah, if you're running OpenEthereum, I'm sure you've already upgraded by now, but if you haven't, be sure to do so, or else you won't be in sync with the network if you're still on the old kind of client here. So this, I think, was the biggest piece of news from the last 24 hours. It was CNBC having an entire kind of, speech, or you could call it, or like segment, you could call it, on DeFi here from a reporter, Kate Rooney here. So what she kind of went through in the video is exactly what DeFi is. She explained how it's decentralized finance. She even said that most of it is built on Ethereum, which is really cool. She actually said Ethereum. How many times have we seen the mainstream media just completely ignore Ethereum and just talk about Bitcoin? So really great to see her bringing that up. And she gave me, she did a very good job of explaining DeFi, I thought, for like a mainstream audience. Yes, there was a lot of buzzwords involved. She said things like DEXs and decentralized exchanges, and those are just kind of like new words that need to enter people's everyday vocabulary. Because if you think about it, the internet itself has a lot of words that needed to kind of enter into people's vocabulary that was just essentially jargon that early kind of computer and internet pioneers were using. Think of like website or like domain name, right? Like things like that. Just even simple things like email. Like just think about all the new kind of like terms and words that needed to enter the English lexicon for people to kind of understand how it all worked at the end of the day. Like the word the internet, right? Internet, intranet, all that kind of stuff. And not just the internet, but like computers in general. Just people coming to terms with that and learning all about it. That takes time, but it gets faster. It works on an exponential scale, I think, where yes, it takes time, but like it gets exponentially quicker the longer we're out there. And obviously, it relies on a lot of people doing education. It's one of the main reasons I do what I do. A lot of other kind of people out there doing it, like the Bankless guys. Camilla Russo from the Defiant, DeFi Dad, things like that. But, where I think us being like Ethereum-based media, we're not going to reach the mainstream crowd. I think the Daily Gwei specifically is more like for people that are in the ecosystem already. Like, I haven't done any like beginner guides or anything like that. Maybe I will in the future. Bankless has some beginner guides. The Defiant does as well. DeFi Dad definitely. But again, those are for people who are going out and searching for it, right? Like if you're like Googling what is Ethereum, you might come across one of these things. But where mainstream media comes into it, like where CNBC sits, is that they have a totally different viewer base than all the Ethereum media has. No one's kind of like going and looking for it when they see it on CNBC. it's just a segment, and like people are watching this and they're like, okay, wow, okay, I didn't know about this, like what's DeFi? Then they go Google it, right, and then their journey starts from there, sort of thing. So I think that that is the number one thing that gets me the most excited whenever mainstream media actually covers this in a proper way, is that it's just going to bring in new people. And even other things outside of this, like I know Dogecoin right now is going nuts, right? It's just absolutely going nuts in price, and people are saying, this is crazy, and like its market cap is worth more than every DeFi token right now. And yes, it is crazy, but it's definitely being driven by like just pure retail mania through Robinhood, I think, mostly because the Robinhood app has Dogecoin on it, and obviously Elon Musk has been memeing about it for a while. But in general, what this does is it just brings more people into the crypto ecosystem, right? I think on net, it's a positive thing. Yes, people are going to like, lose money because eventually Doge is going to stop going up, it's going to crash, and people are going to panic sell or hold it down to the bottom or whatever. Right. Nothing ever goes up forever. Like, that's what a lot of people kind of fall for in this ecosystem, is that they think something will go up forever and not stop, especially the newer people. So there will be people who get burned, but at the same time, it's now exposed them to crypto. Just like this segment on CNBC exposed a lot of new people to DeFi. So yeah, that's where I see the kind of positivity coming from. And, I said here that this video gave me really strong early internet coverage vibes. When you go back and watch these videos from like the late 90s, early 2000s, where a lot of people were still doubting this and like, I don't get it. Like, why would I do this? I've just got my bank. There's this famous video where someone, I think, was interviewing, I can't remember which talk show host it was, but he was interviewing Bill Gates, and he's asking Bill Gates, like, why would I use the internet? And Bill's like, well, I mean, you could listen to your favorite, like, sports, commentators on there. It's like, well, have you ever heard of radio? I remember it pretty perfectly in my head. And then just, when you look at that, you could see that the same reactions coming from people when you say to them, well, you can, on DeFi, you can take your own kind of loan, right? You can basically take a loan and self-custody it, or you could do like trading on there, and then they will say to you, well, have you ever heard of a bank, right? Have you ever heard of a stock exchange? And it's like, well, I mean, there are all these benefits, and then you list off the benefits, and it probably doesn't click the first few times, but over time, they come to terms with it, and they probably learn more about it. So I think that that's, where this kind of like all fits into it. So yeah, as I mean, everyone likes to say, and it's kind of a meme that we're like still very early, but it's very true. I mean, yeah, the markets are hot. Like, it's what, 2.2 trillion total market cap right now. Most of that being like, the top 5 essentially. Which, it might seem hot, but at the same time, when you kind of like look at, I guess, the total kind of market caps of the biggest companies in the world, like the entire world, right? Because this is a global thing. This isn't just a US based thing. Excuse me, sorry. You can kind of see like that we've still got a long way to grow. Like, I think the total crypto market cap will be 100 trillion plus in like, less than 10 years sort of thing. And when you kind of think about that, you're like, wow, okay, that's like 50x from here. It's like, well, I mean, yeah, but like, think about how many people have yet to come into the ecosystem. Think how many people have yet to buy into crypto. Think about how global it is. Think about all the money printing that's going on, which devalues the currency at the end of the day, right? So, using, I guess, USD as the denominator here can kind of be misleading, because the USD has inflated a lot over the last few years, particularly in the last year. Like, the government will say, oh, it's not that bad, the inflation's fine. But then you go and look at everything and it's like, okay, well, everything's getting more expensive, right? So either for some reason everything's getting more expensive because it's just become more expensive to manufacture it, or the denominator USD is losing its value. So it's definitely USD losing its value, a lot of it, right? But at the same time, a lot of crypto is going up based on merit. Like, ETH is definitely still undervalued. Like, I just look at it and I'm like, this is just stupid. Like, Ethereum's going to change the world, and it's still trading at like this market cap sort of thing. Not investment advice, of course, but I mean, it's pretty obvious. But and then you just look at everything else like DeFi, and you're like, if this stuff is truly going to replace traditional finance, and the apps that win this, they're going to be worth hundreds of billions of dollars, just like the TradFi or fintech apps are worth that. So yeah, just something to think about. I'm probably rambling a little bit there, so I'll leave it at that. But I think this was just like really bullish to see some proper coverage of DeFi in the mainstream media. And she also mentioned Ethereum, which I really appreciated. So, Kate, you're probably not watching this, but thank you for doing this segment. I really enjoyed it. So, Documenting Ethereum put out a tweet today saying that the Rothschild Investment Corporation has bought 265,000 shares of the Grayscale Ethereum Trust, which means it now holds $4.75 million worth of the ETH Trust, and they also have a BTC Trust holdings of $1.92 million. Now, for those who don't know, the Rothschilds are one of, if not the most powerful families in the world. It comes from very old money. I'm not sure how far back it goes. And there's like conspiracy theories that kind of like follow this as well. But I think a lot of it was oil money. I'm not totally sure. I think they played a big part in the Industrial Revolution. But yeah, it's just like another kind of like, I guess, institution putting ETH on their balance sheet. Like, I mean, you know, as I said, we were going to start slowly. We started with like My2, and then there's a publicly traded fund, Ether Capital, that also has ETH on its balance sheet. Now, Rothschild Investments Corporation has it. It's just going to keep growing from here. It's not going to slow down. And, it's just great to see more and more, I guess, of this money coming into ETH. And I guess, regardless of what your opinions are of the Rothschild family or whatever, I don't think it really plays into this. I think what plays into it is just like the narrative that more institutions are getting on board with holding ETH on their balance sheet. So yeah, I mean, this isn't obviously direct kind of like spot ETH. It's like ETH Trust through Grayscale, but this is because I think they want tax advantage exposure. So if there's an ETF for ETH that comes out, I'm sure they would have bought that. And Grayscale have said that they're going to roll these things into ETFs once they get approval to do so. So yeah, we'll see how this goes here. So, for those who know Arthur Hayes and his history with Ethereum and ETH, you'll know that just how wild it is that he is now bullish on Ethereum and ETH. And I said here, sooner or later they all come around. And for those who don't know, I'll give a bit of color here. So Arthur Hayes is the former CEO of BitMEX. He is now under I'm pretty sure he's not in prison, but he's on bail in the US. He's been charged with a bunch of crimes and things like that. But I think it was like some wash trading or something on BitMEX or something. I can't remember the exact charges. But anyway, he's a colorful character. Let's put it that way. So he's been around for a long time. He's been a mega Bitcoin bull for a long time. And during the bear market, he was very, critical of ETH. He trashed it. He basically published an article that said, ETH the double-digit shitcoin. Like, word for word, that's what it was called. And sure enough, ETH went to like $80. And, for those who know Arthur Hayes and know BitMEX, BitMEX does play a big role during bear markets, or at least it did, in things going much lower than they need to go, and especially during crashes, because of the fact that you can just like short and go long. I mean, you can go either way, but a lot of people like to short on there. There was all this kind of like, I guess, things about BitMEX maybe trading against their customers and stuff like that. So there's all these kind of things going on. So for him to post an article today, which I didn't link here, but it was basically an article that he wrote. You can go to his Twitter. I'm pretty sure you can find it there. But he basically described how he's really bullish on DeFi, and DeFi is on Ethereum. So what happens when ETH is capturing all that value through fee revenue? And then he had like this table. This table's insane. It was like, I looked at it, and it's like a table of like what ETH's market cap could be depending on how much revenue it kind of like captures. And he had like the most bullish case being a $4 million ETH. I was like, okay, wow. So this guy's gone from like the biggest Ethereum and ETH bear or hater ever, right? Or like one of the biggest, to like being an ETH like Omega bull, $4 million ETH. Now, I think that's quite a joke. I mean, I'm obviously like an extreme ETH bull, but $4 million ETH, I mean, that would probably mean that the US dollar is basically hyperinflated and it's not worth anything anymore. Because, for those of you at home probably trying to do the math in your head, I mean, if I can try to do it in my head, a $4 million ETH would be... it'd probably be like quadrillion dollars of market cap if I am doing my math in my head correctly. So yeah, I don't think we're going to see that. But it was just funny to see that table, and maybe someone linked the article in the reply. I actually do want to kind of find the table here, but I don't have it here. But you can go find it. It'll be it'll be on Arthur Hayes' profile. But yeah, I just thought it was funny to see like the change of tune here. I think, and as I said, sooner or later they all come around. I think it's just too hard to deny Ethereum at this stage. It's too hard to deny the network's growth, DeFi's growth, NFTs, everything happening around that. And it's too hard to deny that Ethereum is now scaling too, which I'm going to talk about in a little bit, and how like, when you think about it, the only reason why anyone is using other networks is because the fees are lower. That's it. There's nothing else about those networks that people want to use. They don't care about anything else. So if your only value prop is lower fees, then you're just going to lose to Ethereum over the long term. So yeah, I mean, I won't go into that. I'll talk about that when I talk about the layer 2 stuff. But yeah, I just thought it was funny that Arthur Hayes came around here. So a really great thread from Swagtimus Prime here talking about the implications of EIP 1559, and he compares it to like the BNB burns that Binance does, and he basically gives some estimates about how much ETH will be burned per day. I think his estimates might be a little high here. I don't think ETH is doing $28 million to $36 million of fee revenue per day right now. I think it's more like around 2025, but still, I mean, these are just estimates at the end of the day. We won't actually know until it's live, but you know, if we are doing say $30 million per day, it'll be around $1 billion per month of ETH burned. Now, that is a crazy amount of ETH burned, right? And as he says here, that's about 12,000 to 15,000 ETH per day at current prices. And then he's saying, you know, this is at current prices, right, of $2,400. What about, you know, when we go higher and higher here, when you think about that, and then when you go to when we do the merge and we shut off proof of work and we go to proof of stake and we cut issuance by like 95%, I mean, and then we're just burning more ETH than we're issuing and it becomes deflationary. I know, you know, I sound like a broken record when I talk about this, and I'm sure you hear this all the time on Bankless. If you know, I know a lot of you watch and listen to Bankless, and you hear it all the time on Twitter. But I just really don't think people understand the implications of this narrative, right? If you think that the Bitcoin narrative of having a supply cap is very powerful, which I believe it is, like from a narrative point of view, don't worry about anything else. Just think about the narrative. You know, you can say to someone, well, you know, there's never going to be more than 21 million of them. All of these are lost, right? And this is like the free float of the supply. And, you know, every year it halves sort of thing. People buy into that. People love that. Now, imagine telling them that ETH is deflationary, right? And deflationary, like, all the time. Like every day, right? Because there might be some days that we pay less fees than others, but if the fees are consistently high, which I believe they will be on layer 1 for the foreseeable future, if not forever, then we're going to be burning more ETH than we're issuing. So, I mean, and you see the meme of ultrasound money. People like to make fun of it, but like, you can make fun of it all you want. At the end of the day, there is no stopping ETH from going deflationary, and that to me is the most powerful narrative ever. You can imagine everyone outside of the Ethereum ecosystem talking about this. I've actually seen so many people that used to be bearish on ETH come around purely because of 1559. They see that and they're like, okay, they do the math, right? You don't even have to have faith here. You literally just need to do the math. You say, okay, what's the percentage of POS issuance once the merge goes through? Currently, it's like less than 0.5%. That's basically nothing. That's going to be less than Bitcoin. Bitcoin won't get up to that for, I think, another 2 halvenings, or get down to that, sorry, I should say, right? Okay, how much fee revenue is being generated by the Ethereum network, and what's like the moving average of this fee revenue? So how long has it been doing this for as well? It's been doing it for almost a year now of like pretty large fee revenue. Okay, so like how much of that is going to be burned in 1559? Let's do some like estimates here, make some kind of like I guess guesses here, sort of thing, or some what's the word I'm looking for? Basically, yeah, guesses. I mean, you have to make some assumptions. That's the word I'm looking for. You have to make some assumptions here. But anyway, let's do that. Okay, well, that means this much ETH is being burned each day from fees. This much ETH is being issued each day. And if there's more burn than issuance, it goes negative. And then they realize, holy shit, this is massive. It is massive. It is absolutely massive. And if Bitcoin was more open to changing itself, right, and to actually adding things to it, I guarantee you Bitcoin would have a fee burn implemented, because it is so bullish for the asset. Like, I mean, you know, I used to think in 2019 when I was talking about this, because EIP 1559 has been around for a long time. You know, 2019 and 2020, you know, early 2020, I was talking to a lot of my Ethereum friends about this, and we're like, we were like, how is this not going to lead to like a substantial value accrual to ETH? Like, just doing the math, and even back then when the fees were low, we kind of said to ourselves, we're like, well, okay, well, if DeFi takes off, then the fees are going to get higher because we can see the scalability challenges. And, you know, we were just doing the math back then. We were kind of like doubting ourselves too. We were like, are we crazy for thinking this? But, you know, we're not. And now so many people are seeing this. And this is a major reason why you know, a lot of the people I know and myself are buying ETH in the bear market, especially during 2019 and 2020. We just saw this and we were like, you know, we know it's going to take a while to play out, but once it does, this is going to be absolutely, you know, game changing. It is going to change, and this is what's going to lead to the flippening. I truly believe that Ethereum will flip Bitcoin in value because of these two things: the merger, dropping issuance down to 0.5% or less under proof of stake, and 1559 burning ETH as fees. So yeah, I mean, I know I'm being like really bullish right now, but I mean, every time I go through this in my head and do all the maths, like, I can't help but be bullish, right? At the end of the day. So anyway, I'm going to leave it at that because I don't want to ramble too much on about that because you guys have heard this a million times. But I think that when you're selling Ethereum as a platform and ETH as an asset to people, not as investment advice, but just telling them why it's valuable, just point to this, right? Just say the actual utility of the network will drive, once 1559 is implemented, will drive direct value to the token, burning, a majority of it out of supply forever, mind you, leading to deflationary pressure on ETH. And then a lot of people that I've spoken to about this take a little bit, I mean, it depends how new they are, they take a little bit of time to get it, but they get it. And they're like, holy crap, like, why is Ethereum still number 2 to Bitcoin, right? So anyway, I'm going to leave it at that. Go read this thread if you want to kind of like read the full thread from Swagnimus Prime here. It'll be linked in the YouTube description below. So Stani from Aave put out an interesting tweet here where he basically said, recipe for protocol builders. And he lays out 4 steps here. You can either solve it mathematically. If you can't do that, you solve it optimistically. If you can't do that, you solve it by governance. If you can't do that, don't solve it, just let it be. So when you look at different protocols within the Ethereum ecosystem, and you look at the different problems that they have, right? You kind of think to yourself, well, okay, like, how do we solve this? If you can't solve it with pure math or cryptography, then you need to solve it some other way. So then you go, okay, how do we solve it optimistically? Now, what optimistically means is like, okay, how do we solve it using maths and cryptography? But by solving it optimistically, we assume rational actors. So I would put proof of work and proof of stake into this, where we assume that proof of work miners and proof of stake stakers are rational enough not to get themselves kind of like slashed in proof of stake and not to lose money or opportunity cost in proof of work by kind of attacking the network, right? Because we can't solve it with pure cryptography, we have to add cryptoeconomics into it. And for those of you who listen to Justin Drake's podcast on Bankless, you'll know exactly what I'm talking about. If you haven't, I suggest going and listening to that. Okay. And then next, if you can't solve it purely with cryptography or maths, or purely with cryptography, maths, and optimistically, then you can solve it with human governance, right? So governance being like, token holder voting, where we've seen a lot of DeFi protocols, off-chain kind of like signaling, things like that. And then if you can't solve it with that, just let it be, because you can't solve it at the end of the day. So I think maybe the order of operations maybe is a bit, I wouldn't say out of whack here, but I would say that there's maybe a step 0 here, where you like, I've explained this before, how I think like the layer 0 of these systems are people. So at the end of the day, even if you're solving it with pure cryptography and math, the people can still change the system. Because if enough people agree to change their node software, right, or change their mining software, then the network will change to that state. We just saw this play out with Berlin. Enough of the community agreed, right, the majority pretty much agreed, okay, we're going to fork to Berlin and we're going to upgrade the network, and that's going to be the new rules of the protocol. So there are certain upgrades that never go through, right? Or EIPs that never go through. Remember ProgPower, for example. The only reason ProgPower didn't go through is because of the human social layer. Humans blocked it because Ethereum does not have on-chain governance. So for Ethereum, I mean, the other systems do have on-chain governance, so I guess maybe this makes sense for them. But for Ethereum, definitely step 0 here, or at least number 0, is the fact that we have this extremely strong social governance layer that is like, I guess, like the key to it all at the end of the day. I mean, I truly believe that having a strong social layer is the key to these systems. And if you don't have that, then you are not going to be anywhere near as decentralized or as strong as a kind of ecosystem as you want to be. So yeah, interesting tweet from Stani, but I'll leave it at that for now. So onto layer 2 stuff. dYdX is absolutely exploding in growth here. It's only been 10 days since their public release, and they're already doing over $27 million of 24-hour trading volume with only 5 assets available to trade so far. I mean, they're going to, as I've said before, they've announced they're going to be adding 2 assets per week here. So I expect this trading volume to grow pretty quickly. I mean, I've talked about this plenty of times, so I won't dawdle on this too much, but I wouldn't be surprised to see this at 100 million plus within the next couple of weeks, depending on what assets they add as well. As I said, I think they're going to add all the Coinbase assets first, because it's a regulatory shield there. But yeah, great to see Ethereum scaling here on dYdX. Next up, we have Immutable, who tweeted out today that $1.3 million in gas fees has already been saved by users of the Immutable X platform. This is just absolutely awesome, right? I mean, gas fees are still, like, gas fees went down for a bit because of flash bots. They're actually up again. I can see here, like, they're almost at 300. I do wonder why. I mean, maybe is the ETH price crashing right now? I don't know. Maybe if I check up here. No, the ETH price doesn't seem to be crashing. There's not much volatility in the markets. I wonder why that is. Maybe there's some new, like, thing for people to ape into. Whatever. Regardless of that, the fact that Immutable X has been live for a week now, maybe? The last 7 days, they've saved people $1.3 million worth of gas fees already. This is the power of Layer 2. This is the power of Ethereum scaling. And this is what people are going to see and users are going to see. Users ideally are never going to have to see gas fees, like end users. They're never going to be on Layer 1. Which is what we need to get to. So, just more Ethereum scaling here. And on that note, Bankless put out an awesome newsletter today called 7 Things You Can Do on Ethereum Layer 2. You can go check this out. It'll link in the YouTube description. But basically they list 7 things you can do here. You can borrow lend on Aave, which is on Polygon. Trade perps on dYdX, which is obviously what I just talked about. They're on Layer 2 using Starkware. Stake SNX on Synthetics, which is on Optimism. Yield Farm on Loopring, which have their own technology, and I've spoken about Loopring, many times. Trade on Diversify, which is built on Starkware's technology. Donate on Gitcoin using ZK Sync, or stream money on Superfluid. Now, I actually don't know which Layer 2 Superfluid is built on here. I'm trying to think right now. I actually want to know. Like, I'm curious. I'm just gonna scroll through this newsletter here. This is packed, by the way. This is awesome to see. But I'm curious of what. Okay, yeah, I suspected as much. They're using XDAI and Polygon here, so yeah, that's cool to see there as well. So yeah, this is all the things you can do right now using the different Ethereum scaling solutions. So definitely go check out the newsletter. As I just showed, it's packed. You need to go check it out and need to go do all this, because the only real way to understand the power of Layer 2, I believe, is to actually use it. And I would say there's something here for everyone, right? If you have SNX, you can go stake it, which I'm sure a lot of you have probably done already. If you borrow and lend, you can go and do it on Aave, trade, on Loopring, Diversify, or dYdX here. And I'm sure a lot of you have used ZK Sync on Gitcoin to donate. So yeah, go check this out if you haven't already. So the Chainlink 2.0 white paper has been released here, and it is a big one. I am not going to read through the white paper or even go over the majority of what's happening here, because it is 136 pages long, as Chainlink God says here. He basically points out the key areas of focus, including hybrid smart contracts, abstracting away complexity, scaling, confidentiality, order fairness for transactions, trust minimization, incentive-based cryptoeconomic security, and then he links a bunch of different images here. Now, because this is a white paper, it is extremely technical. I highly suggest going and following Chainlink God, because he has promised that he's going to do a thread here in due time, which I'm sure he will, because he is he is to Chainlink what I am to Ethereum, I would say. So definitely my favorite follow in the Chainlink community here. But yeah, this looks to be huge. I mean, I know Chainlink gets a lot of kind of like flack because of, I guess, like their community being the quote-unquote green frogs. And I think that's misguided, honestly. I've actually disagreed with other Ethereans about this for a long time now. I don't think that the green frog community, just because they're really bullish on it and they're like a lot of them are anon, I don't think that makes the project a bad thing. Yes, I know the token, has gone up a lot in value in the past, and right now there's not much use of the token, right? Because you can't stake with it and things like that. But I don't think that's an issue, right? I think, why does Chainlink get such a hard time for this when there's so many DeFi tokens within crypto that do nothing? Uni does nothing right now. Like, it's a governance token, right? At the end of the day, it doesn't capture fee revenue or anything. Like, yes, you can vote in governance and things like that, but I mean, at the end of the day, like, how important is that to people? Is it actually worth as much as it is? No, people are bidding up Uni. I mean, one reason people are bidding it up is because of the fee revenue being I guess, turned on in the future. So why is that any different to people buying Link? Because they believe that staking will be implemented in the future. There'll be more value accrual going to Link in the future. So yeah, I never really got that there. And I don't even hold any Link tokens. I'm not just trying to pump my bags here. I like to call out things as I see them. And yeah, I just didn't think it was fair. And Chainlink God is, as I said, he's one of my favorite follows. He is my favorite follower in the Chainlink community. He always puts out like really great information. He's always objective about it. He's not, putting out misinformation or fake stuff as far as I can see. So I just don't get the flack here. Like, I wish we had someone as dedicated as Chainlink God to Ethereum besides, I would actually say like he's even more dedicated to Chainlink than I am to Ethereum and to some of the other people that are to Ethereum. He's just an absolute machine with the threads that he does, the information that he puts out on, especially on Twitter, to correct a lot of misinformation as well. But anyway, I'm not going to shill Chainlink God too hard here, but yeah, I just wanted to kind of clear that up there. If you're someone who loves reading technical papers, definitely go check out this 136-page white paper here. If not, you can wait for Chainlink God's thread, which I will be sure to retweet at the time, and I'll be sure to cover on the Refuel as well. So Santiago put out a great tweet today where he basically says, every interview they ask me why crypto is reaching all-time highs, which is underwhelming. Instead of price talk, let's discuss how Ethereum, a 6-year-old network, has grown into the largest open source developer community, which makes it all-time high human capital. There is 2,325 active devs, which is a figure which has grown 215% in the last 3 years. Now, I think when he says the largest open source development community, he may have meant within crypto, because I think it's not within the world. Like, the largest open source development community is definitely the Linux community. But other than that, I think he's right in that you bet on the builders at the end of the day. Like, that's what I bet on. You bet on the talent and the mind share and you know, not just the developers, you know, the technical developers, but also the builders in different areas like marketing and growth and business development and design, all that sort of good stuff there. And yeah, I mean, when you look at that, there is like, I think there's a chart that shows where the other networks are, and they're like in a distant kind of like second, third, fourth. They're not even close to Ethereum. And a lot of them are actually going to be building using Ethereum's kind of tooling and smart contracts and languages like Solidity, because they want to be EVM compatible, because they can't get traction without being EVM compatible, which has a little bit of a hilarious irony to it, I think. But yeah, great tweet from Santiago here. I won't spend too much on this because I know I'm running out of time here, and there's one more thing I want to talk about. But basically, yeah, this is one of my main investment theses for ETH and the Ethereum ecosystem in general. So yeah, great tweet here. All right, lastly, we have the Index Co-op has a new vote live to vote on a BTC 2X fly. So for those of you who have the ETH fly, I guess like index that you can buy from token sets, you'll know that gives you basically leveraged exposure to ETH, or automated leverage exposure. Now there's going to be a Bitcoin one. It's being put through the governance process. So if you hold index tokens, you can go vote on that right now. It'll be linked in the YouTube description, of course, for you to go do so. This is cool. I think, you know, after BTC, I would hope to see like maybe a DPI leveraged index as well. That would be pretty dope. And then after that, like a bunch of other ones for different tokens. I think these automated leveraged kind of index tokens are going to be very, very popular. I mean, the fly is already out. The ETH fly is already at $30 million or something like that of TVL. So yeah, I hope to see more of these kind of coming to market. But yeah, if you have index tokens, definitely go vote on this here. All right, that was a long one today. Thank you again, everyone, for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks, everyone.